Hi guys. Today we will analyze Western Union stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock has been an average performer in the overall market. The long-term trend is still neutral, but the short-term trend is positive, so the stock is getting more and more appreciated by traders and investors. Support level is around $19. Strong support levels are around $18 and $17.30. Resistance levels are around $20 and $21. In the last month the stock has been trading between $17.30 and $20.50 range, which is wide. It is currently trading near the high of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 7.7 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around -1% per year, for last 5 years. We see that the average profit margin of the stock has been around 11% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 56% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Western Union Company: bad, average, and good. First scenario. Western Union will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 1%. Future profit margin would be low, 8%. Future free cash flow to net income rate would be low, 60%. In this case, the fair value of the stock today would be $16. Second scenario. Western Union will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 11%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $25. Third scenario. Western Union will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 3%. Future profit margin would be high, 14%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $37. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 1.97. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Western Union, analysts forecast growth rate around 3% per year in next 5 years, and future P/E around 10. Again, I will use 3 different scenarios for Western Union Company: bad, average, and good. First scenario. Western Union will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 1%. Future P/E would be low, 8. In this case, the fair value of the stock today would be $6. Second scenario. Western Union will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future P/E would be average, 10. In this case, the fair value of the stock today would be $8. Third scenario. Western Union will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 3%. Future PE would be high, 12. In this case, the fair value of the stock today would be $11. As you can see, today the stock is overvalued, $19, even if we expect the company's high performance in future. It's a good company with a great sustainable dividend, 4.77% yearly, however it has a high debt level and very limited future growth. The stock is fairly valued at the moment. However, the current low valuation adequately reflects the future expectations. I put the stock on my watch list and I may consider buying the stock just for the dividend, but do not expect any growth here. Company strengths. Western Union is a leading independent provider of consumer money transfer services. It's a valuable asset and a go-to name in international markets for money remittances. It offers its services through a network of more than 550,000 agent locations in more than 200 countries, with most of the locations outside the United States. Although money remittances slowed during COVID-19, a prolonged period of limited mobility could increase demand for Western Union's services. The company has been actively building out its presence in electronic channels in recent years to adapt to the change in the industry. Western Union saw a sharp spike in digital transfers at the beginning of the pandemic, and growth has remained strong. Western Union's return on assets of 9% and return on equity of 226% are amongst the best returns of the industry. Profit margin of 15% is amongst the best returns of the industry. Western Union has a yearly dividend yield of 4.77%. Which is a nice return. It pays out 47% of its income as dividend. This is a bit on the high side, but it's still sustainable. Risks. The company could be susceptible to eroding competitive advantages, as newer and cheaper money transmission alternatives become an increasing risk. Alternative channels for sending money, such as cell phones, could cut out money transfer companies like Western Union. Risks include issues related to a potentially worsening global economy and consumer adoption of non-Western Union digital alternatives. A stricter stance on immigration in developed countries could limit immigrant populations and damp their employment opportunities and money transfer volume. The company is expected to show a small growth in revenue and in earnings per share. In the coming 5 years, the EPS will grow by 2.5% yearly. The revenue is expected to grow by 3% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.